Alrighty, traders, welcome to the AAA session, which is the Ask the Analyst session this afternoon. My name is Gary Fichardt, Director of Trade here at Market Traders, and I have a panel of expert traders that we're going to be talking about the markets this afternoon. A lot of things that we're going to go ahead and chat about this afternoon, but not a lot of fundamentals that are out there that is going to move the markets this week. We know that the Wednesday news, which is of course the rate decision here out in the US, and of course, data around that, the statement, the press conference, all taking place on Wednesday. Is the market's going to stand still and wait for that to take place before we start seeing some movement? Well, we've got a lot of things to talk about. Let's go ahead and jump straight into it right now with my guests, which is going to be Chris and Tyson. So let's go ahead and introduce the panel this afternoon. And as usual, we got the experts. Chris, how you doing, Chris?
I'm doing great, Gary. Happy Monday to you and everybody listening and watching. Hello.
Fantastic. Good. And Tyson, how are you doing today? And your mic, Tyson, your mic? You're going to have to throw the mic on there, bud.
Yeah, that'll help. I'm doing good. Weather's good. Looking for some good moves in the markets, and let's get the show started. Let's talk about some trades.
Absolutely. We've got 30 minutes to crush this out, and trust me, we've got a lot to talk about. Not necessarily about fundamentals. We've only got one big news report coming out this week that eyes are on, and that is, of course, the U.S. rate decision. They're going to keep the rates unchanged. That's the expected number. But, of course, we've got the press conference, the rate statement coming out at the same time. What is your guys' consensus around what's going to take place around Wednesday's news?
For me, it's going to be interesting. I think that the Fed is going to be in an interesting situation because we need to see if this opening is going to take hold and things are going to get back on track. And if it does, I actually see interest rates starting to go up pretty fast because I think we could start to see some inflation. I mean, you got savings rates that are pretty high. You've got there's a lot that's going on right now, and I think that the inflation could start to creep its head in, which would mean that the Fed needs to pay attention to potential inflation. That is only if the economy can catch, can kind of get its footing again. And so we don't really know. So the Fed's in an interesting spot. They don't have a lot of room, obviously, to move down. I think they could start eventually in the next 3 months, 6 months, 9 months, 12 months, start aggressively moving up if we start to see inflation. And that's going to be the very interesting thing in the next year is that are we going to get out of this lockdown and everything that's going on right now? And are we going to start to see massive levels of inflation? And is that going to cause the next swoon to potentially take us down again because of that big inflation? I don't know, but it's going to be one thing I do know is I think the volatility is going to be here to stay.
Yeah, absolutely. And Chris, what is your take on what we can anticipate with the dollar index movement if they keep the rates unchanged this Wednesday?
Well, I want to say that, probably for the last 2 years, since 2018, 2019, you could argue that maybe even further back with Yellen as the Fed chair, when the Fed was looking at shrinking the balance sheet and changing interest rates and discussing it, 2018 was the year they started to raise all the rates, and then 2019 was the year they started to cut all the rates. 2020, we can see the emergency cuts, and all central banks have followed suit. So I guess my concern is, this Wednesday, I don't think that is really the MO of the Fed is to, again, start looking ahead. I think right now the Fed is going to stay in the present. I think that all the central banks, like we saw last week with the RBA, the BOC, the ECB, they're all staying in the present. The Fed is probably going to stay in the present. We have a big election to get through in November. I think now more than anything, we're not to get super political here, but now more than before, we're probably starting to see a little bit more support funding going into Biden or at least Democrats to see there might be a changing of the guard coming in November. We don't know. It's going to be a very polarizing election. It's going to be I think it's a really important election, I think, for the U.S. And I just think that if the Fed starts to speak up now with what they're going to do over the next 12 months, I think it gets kind of the cart before the horse, is that the saying? Yeah. Where it's like they're going to start moving things around and start maybe causing some reactionary policy from other central banks thinking like, oh, everything's fine. We don't know how we recover from this right now. It's like, sure, we're optimistic. Things are getting back to normal. Having a job report last week that caught economists off guard. Like, look, jokingly, we have the RBA or the Australian economists and Canadian economists, their job numbers are terrible and awful, and their forecasts never match their actuals. Last week was the first time in a long time that the U.S. non-farm numbers were way off. They predicted 8 million negative, and it's like, what was it? 8 million negative came in 2.5 million positive. Yeah. It's like, that's insane. Right. So it's like it's way off. And so what the markets do? They rally. The Dow finished 800 points or 800 some points higher, and for the week, the indices were 3 to 5% higher, and this drift in our broken record, narrative continues, where we're like, what's going to happen? Are we just going to? Is it truly a V bottom? And I'll say this, and I'll give it back to you, Gary. When you see average traders, or not even traders, just investors, or everybody just on the street, random people, Main Street, talking about it's a V bottom, it's time to get back in the stock market, I'm thinking, I don't know about that. I think this is the time where it's like we're back up towards those historical highs. I can't really justify buying right now. There's so many things I want to be involved in, but I can't justify buying right now at these levels. So I just think we're not going to get to new highs, like significantly new highs, sustainably new highs, without having some type of correction or some type of downward turn again. And as Tyson said, I mean, we don't exactly know what what is going to happen or what's going to be the catalyst to make that happen. But honestly, there is no shortage of crazy stuff that can make these markets spin and turn. And maybe it's coronavirus, because we saw that back in March. Maybe it's Trump. Maybe it's, I don't know. I don't care. We have a lot of technicals to talk about today, so that's where we focus. But man, there's so much stuff in the peripheral. There's so much stuff out there, but it's like, just focus on what's here and now. And so the Fed, the U.S. dollar index, I think the dollar is going to pick up in the near term. I'm looking at, we have some good harmonic patterns. We have some good oversold conditions on the dollar. The euro dollar sort of reached those peaks back again into like 114 roughly. So I think the dollar is going to get a little bit firmer in the near term. But I'm just curious how it happens, right? Just like everybody else, we've seen some amazing 3 months of trending. It's like, I think we're at least going to have a phase of corrections and then some range-bound conditions to get it through the summer. And then after August, it's all about that election. And the election is going to be the next big catalyst, in my opinion.
Yep.
There's
I
your
agree.
1 minute answer. Your 1 minute answer time.
real fast on that too. And the one thing that is interesting that nobody seems to, everybody kind of glossed over last week. Trump was talking, and he mentioned China a few times, and he said he might have to go back to the drawing board on the trade deal thing. You got to remember that started some volatility earlier this year that people forgot about, because we had the massive volatility with Corona and all this kind of stuff. So now he's starting to throw in some of those trade. Are we going back to the table on this? And I don't think the volatility with that situation's over either. So you're 100% right, Chris. There's a lot of unknowns, and the market is pricing it in as if everything is known and everything's going to be amazing. And you said it perfectly. When those on the street are saying one thing, you want to look the other way, because if the masses knew what they were doing, everybody would be making money in the markets, and not everybody makes money in the markets. Typically, we want to do a lot of what the opposite of what the masses do. So I agree, Chris. I'm looking for better levels to buy at. I've been saying for couple weeks now, cash is king. I do have one stock that we could talk about here in a little bit after we're done talking about currencies, but one stock that is at a level that I'm willing to buy at. It's kind of a flyer, and I think it makes sense kind of what's going on, but we'll talk about that in a little bit here.
All right. Well, just as you guys are saying, we have a lot of things that are taking place right now. We've got, firstly, number one, Aussies, or the Australian economy is actually doing very well. We've seen some strong rallies in the Aussies over the last few weeks, and it's continuing. And no, Tyson, you got a couple of pairs that you're going to be focused on today that is built around the strong movement of the Aussie. But we've seen the Aussie looking to start cutting their exports to China and start looking at other places to go ahead and export to. That's taking place. We've got the trade war trade tension still in place here with the US and China. We've got the elections coming up in the next few months. We've got unrest here in the US based on the shooting, the police incident, and we've got of course still COVID-19 open. The US is opened up for business, but yet we had a little spike in the numbers coming after the Memorial Weekend. So things are not completely there yet, but the funny thing is the numbers that are reflecting over the last couple of weeks that we're expecting some worse numbers. The expected numbers have always been a lot worse, but then the actual numbers that come out have been better than expected, but still bad, but better than expected, which is giving that little bit of a boost to the currency pairs. We've seen that with the Aussie last week. Last week, if I look at the numbers, we're expecting quarterly data coming out for the GDP. That was expected to be minus 0.4%. It came out at minus 0.3%, so still a negative number, but positive compared to what the forecast was, and that gave a little bit of a boost to the Aussie. They kept the rates unchanged, which is obviously no surprise to that, which now brings us back to this week, where we have numbers coming out for the US on Wednesday, and they are expecting obviously the rate to be unchanged, which I think that's going to be a given. But then we've got, of course, CPI numbers coming out. I know it's monthly data, so it's not a big thing, but I think it's going to be important to see how the inflation numbers are comparing to the previous months. They're expecting inflation to be at 0%, which is actually up from the previous. So which means that inflation is starting to be on the slide up on that. A lot of data. How do you think, guys, the market's going to digest all of this information that we've got right here? Because we have seen the markets moving in a direction, hasn't seen a lot of correction move, specifically the Aussie. And I want to go ahead and talk about the Aussie, and I want to Tyson, I know you focus on the Aussie US dollar. How do you think the Aussie US dollar is going to be affected by the fact that we've seen such strong movement in the Aussie, but yet now we've got this data coming out on Wednesday, and if I look at the technicals based on just a technical perspective right here on the dollar index, we're heading down to a very key support level for the dollar. Could we expect the numbers this Wednesday, like we've seen with other numbers with the rate decision out in Aussie and New Zealand? Could we see if they keep the rates unchanged? Could this be a bullish move to the dollar? And then could we then start to see a little slightly bearish move on Aussie, creating an Aussie US dollar sell-off that you're probably looking forward to?
I am, and let's put some things in perspective as far as what's happened within the Aussie this year. It's crazy. We saw a peak to valley sell-off within 3 months of 20% in a currency. We're not talking like high growth stocks or high beta. We're talking currencies, major worldwide currencies. A 20% sell-off in 3 months, followed by a 25% rally in the next 3 to 4 months. That's crazy volatility. And so what I think we're doing is we're creating this longer term wide channel that I believe, and it's kind of if you look at the Aussie dollar long term, you see that it puts in channels, and then it has big volatility moves down. The pattern has been big volatility moves down, and then put in a new channel, big volatility move down, put in a new channel lower. And it's happened for years now going back basically since 2012. We've channel, volatility move down, channel, volatility move down. And so what I believe is happening is we've kind of put in that structure of we've had this channel. The channel moved from, moved in that range in 2018, 2019. We put in this volatility move down. And now I think we're going to form this wide channel, but I think that we're sitting at a topping area. This is a prior area that was support. It's going to be a difficult area. I've got to stop. I'm looking for price to stay below right around 68, 69 level. I think that 70 level is going to be very difficult to get through. Basically, long story short here, we've gone aggressively higher, 25% move from the bottom since March. I don't care if you're a stock, a four month 25% rally in anything is aggressive. But then when you talk about currencies, that's unsustainably aggressive. You look at any currency in history, you look at even the pound during Brexit when it had those massive moves down, they all retrace back. And look at what happened early on in the year with the Aussie where it sold off. I was talking to somebody a fellow trader who's been trading for a long time, who's actually in Australia and a citizen over there. And he was super bearish. All the Aussies going to 50 and it's going to lower. It's, it's a rich economy that's not real smart, all this kind of stuff. And he was right for a time being, and now he's been completely wrong. I don't know if he's changed his stance since then. My point is this: is the Aussie meant to be priced at 0.5? Probably not. Is it meant to be priced at 0.7, 0.8? Probably not. I think it's someplace in between the range right now is where I think equilibrium or fair value for the Aussie is right now, which means we're trading high on the curve, and I believe we're due for a decent size sell-off. My target on the sell-off would be down to around 62.50 to 63.
Well, let's take a look at that. Yeah, I've got the weekly chart open right here, and if you're saying a sell-off back down to about 62, so what you're saying is this major low that I had here from the previous 2016 low right here, that it's managed to break above in the weekly. Are you saying that we're going to trade below that? Because I agree. We are looking for a correction move in Aussie. There's no doubt. And hopefully with the strength that we're going to get out in on Wednesday with the FOMC, we could see a strong dollar that could drive and push this period down south right here.
Yeah.
Now, the question here is, if it breaks through this, which is now becoming support because it was resistance at 68.16, if we trade back below that, are you saying that we're going to stay below there and get down to
not
62?
necessarily. So I think there's a pretty nice looking pattern setting up there too. I mean, a nice looking head and shoulders pattern. So I think we could be going to 75 or 80 over the course of the next year or two. However, what I'm going to do is I'm structured short right now. This 64 level, we have a level of demand, daily demand sitting there. That 64 level is going to be interesting. I'll probably take some of my position off there, see how price responds. That could be a nice looking right shoulder of a head and shoulders pattern and cause a breakout above. But I'm going to see how price responds around that 64 level. If we can break through that, I believe we're heading down to 62. I think a safe trade, just looking at right here, is just looking at today's price action, shorting on a break below today's low, putting a stop at 68.20 or so, and putting a target at 64, I think is a pretty solid, high probability, in my mind, high probability trade based on where structure is right now.
Okay, so I'm going to, and I agree. Look at the 4 hour right here. I mean, we are just holding up there.
Yeah.
And look for that down. We're getting big divergence sitting up over here. We've got a monthly target down here at 66.11. If it breaks through that, we're going to get down to that 63.37 level, which will get you that 64 level that you're looking for. And if it continues to move down there, then obviously that's going to be a much bigger move to the downside. Okay, makes sense. Now, Chris, what is it that you're focusing in on this week for trading?
So I know that I know, Gary, you have a different currency pair for everyone else that's watching, but Tyson and I know Tyson especially we talked Aussie, oi oi oi.
Oi oi.
But we have been talking about the Aussie, and so my weekly outlook this week was like 95% focused on just the Aussie basket. I think that we have and it's not often, but when we have these really solid technical alignments. And again, I try to keep the technicals really clean. If it's a higher time frame and it's overbought or oversold, and if it's a higher time frame and along with that overbought, oversold, if price and momentum are disagreeing, if we see divergence at those tops and bottoms, I am so ready for the trade to sell high and buy low. So, I mean, Tyson had a great setup on the Aussie dollar. I'm watching that 4 hour chart. I'm watching that 1 hour chart. I actually have pending orders that are just sitting as stop sell orders. Like, I want it to drop. I want a little nudge to the downside, and I'm looking to get filled and take it down. Tyson, I have a little bit more conservative level around 6,700, but that's kind of like get a quick quick injection of profit. The trade I want to talk about, Gary, for everyone today is the pound Aussie. Same thing. My 4 hour chart, my 8 hour chart, my daily chart. I have some really great alignments where it's oversold. We have these big levels going back into 2000 and looks like May 2019. We've also had since Brexit, which is pretty incredible. We had this crazy run on the pound Aussie back in May 2016. Brexit happened that summer in June. And, it's interesting that the pound Aussie found a way to come right back to it at 2.05. And from there, we're still kind of in this larger consolidation channel on a daily and weekly chart. But the pound Aussie, to me, selling off. I mean, I'm looking for levels, and I like to see some of these big, like, pre and post summer trends go to round numbers. So to me, a round number is 1.80. Where if we're currently trading at 81.30, sure, we could drift a little bit lower. We can start looking at some bullishness now, maybe have one more test of those lows to be a stronger divergence, but I'm looking for lows between 1.80 and 1.76. Now, I know that seems like a lot to kind of carve out a low, but again, this is what you can use for different trade sizes. You can look for confirmation and turn a system on a buy only. You can look for confirmation to make sure you have bullish price action. So I am currently long. The trading room with me last week, we did talk about the pound Aussie buying only with Right Trader Max, and so my robot's running with it, and that's fine. So I'm looking between different price styles to get in some confirmation to go bullish. I've got my system looking to buy only. I'm looking at levels on the manual, my manual trading to get around 1.80 to 1.76. I can take a couple of trades and test the waters there and make sure that I have a stop area around 1.75, 1.75, and just play that 300 to 400 pip area, carve out some lows, carve out some probabilities, and the oversold conditions in this case with the divergence in this case on multiple time frames end up giving us a nice corrective move to the upside. Now to the upside, I'm looking at like 1.90. I mean, so by the way, between Euro Aussie, Pound Aussie, we've watched this thing drop around 2,800 pips. Now, if you just did the math, okay, let's take 38% and take 2,800 pips. Okay, we're looking for 1,000 plus pip move. That's only a 38% retracement. You take 2,800 pips divided by 50%, which is what these currency pairs tend to do, is find equilibrium. So a 50% move, we're talking about 1,400 pips. A 38% move, we're talking about over 1,000 pips. So when we carve out those lows, whether it's 1.80, whether it's 1.76, I would look at something around 1,000 to 1,500 pips of bullishness to allow the pound Aussie to balance. And because we've had this extreme, March was this way in the Aussie and April and May have been this way in the Aussie, it's an incredible 3-month cycle where, Tyson, Gary, like I can't remember the last time we've actually seen, well, I can actually, last year, April, May, June, April, May, June, into July, and then August is when the pounds started to show those tops and bottoms, and we had what was a roller coaster ride of weakness to a roller coaster ride of strength. So I think if you give the Aussie pairs time, we're going to start seeing those, like March and April and May have all changed directions. So unless the Aussie is going to continue to have this positive, these positive vibes like just flowing into the Aussie, I think it's on the verge of being derailed. And I mean, Tyson brings up some great points with like the 20% drop and the 25% rally. That just doesn't happen on currency pairs, but it is. So
Sure.
It is remarkable. It is something that we're paying attention to. But again, the technicals are as good as I've seen them. And, every time we've had sessions like this and we've talked together as a team, when we start talking about these higher time frames, all these major technicals and all these big levels, we might not be spot on with the timing, but we are typically spot on and right on the money with these directions. So, if this is the week that starts to happen, awesome. Let's see it. Let's see us, bottom out here on the pound Aussie or bottom out on the Euro Aussie or top out on the Aussie dollar. And start getting that confirmation to go the way that we've been talking about now for the last couple of weeks. Meanwhile, it's been important that traders protect all their profits and get ready for that kind of new position to start underway. So I like the pound Aussie around 1.80 to start buying. I'm looking for levels at 185 and 1.90 to take some profit. I'm giving it that 300 to 400 pip buffer to the downside, but I'm looking up as high as 1.90 to safely take some profit when the bulls are officially going to confirm.
I like this, Chris. I like this, and I want to make sure that every student that's watching right now understands something around support and resistance. How to be able to trade support and resistance, and just to go ahead and reconfirm what Chris was saying. If you go ahead and take a look at the chart, notice that we're in a range. This is, well, not a range, but a channel. We've got an up and bottom channel right here, and we're testing the bottom of the channel right here. A lot of traders struggle with the fact that they're not 100% certain if we've broken the channel or the channel we've tested. And I have a very simple concept around this, and that is this: the channel is only broken when the market breaks and retests. So which means that until we break through right here, come back, retest, and then head back down, this is the confirmation to go ahead and start looking to sell. Up until that point, I would only be looking to want to buy at this channel right here. And it's just a very, very simple concept. Buy at support, sell at resistance. We're at support right here. Keep buying. If price breaks through that level, then of course, stand on the sideline, wait for the retest, start selling. That's the concept that you should be using and should be applying. And Chris mentions he's using his Right Trader Max to go ahead and deploy that. Listen here, we did that for the last few months, and in the first week of this month, we managed to close out 27% profit with 6,555 pips in the trading room. I know that Chris is having a lot of success in his trading room. That's a success that we've had in our trading room, trading this exact trading strategy that Chris is talking about right now. So buying at support, selling at resistance, using automation, as Chris mentioned, in a direction. And again, traders can wait for different confirmations. Looking at support and resistance and buying and selling off those levels, and then using a lower time frame, like a 1 hour, 4 hour time frame, depending on what you're comfortable with. Then using a system on that time frame to deploy in that direction. And if that system confirms the bullish signals, then you should continue to hold on to that position. So that's really keeping it simple when you come to support and resistance. So what Chris said there, hey, he's at support right now. He's looking for only buying options. He doesn't see this as a broken trend line yet. He sees it as a support level for the market. And honestly speaking, if you actually look at the chart, this chart, all right, is screaming retracement. I mean, come on. This is screaming retracement. There's no doubt in our mind that price is looking to go ahead and pull back up again. And this trend line this channel line may be the support that everyone's looking for and for what the market's looking for as well. So I'm right on the money. I agree completely with what you're saying there, Chris. I like that analysis.
Yep.
Now, that brings me to my next pair. And the next pair that I'm going to be focused on, and it's because I'm so deep in this pair, I've got a lot of positions holding on to this, and that is the Euro New Zealand dollar. You can see we've also had a lot of weekly, let me go ahead and show the chart right here. We've got a lot of weekly bearish movement over the last, 1, 2, 3, 4 months. 4 weeks. So the last month, we've had really a big bearish move on the Euro New Zealand dollar. Now, just like Chris, if I go ahead and compress this up a little bit, I can be a little bit more technical here and change this trend line and just move that up a little bit. So we've got a little bit of room still to this upward channel right here, but we do have an inside bearish channel, which is something like this. I actually should go to the daily and pull that up. It's going to be able to give us a little bit more of a detailed. So if I go ahead and pull this up right here and I extend this trend line to the top here, do something like this, pull it up to the top, and then drag it down here. This is a falling wedge right here. This is a falling wedge right here. Now, traders are going to say, well, big dog, we're breaking through that. Well, my consensus around this is, or decision around this is that we're not broken yet, because price can do this, close out here, and then come back into the range, and then break out to the upside. In fact, we see a lot of false breaks out of falling wedges to the south side. But when it comes to when it turns around and breaks to the upside, we see a bigger move to the upside. And so I'm very comfortable looking for the Euro New Zealand dollar to actually start its rally. Now, I'm not seeing any convergence here on the daily here, but I am looking at the 4 hour. And if you look at the 4 hour right here, look how price has moved lower and lower and lower, and eventually found support right here. And we've got a beautiful oscillator confirming that we're now moving bullish on the oscillator. So the oscillator is going bullish. We have, as Chris mentioned, we have the disagreement between price and momentum. And so I'm anticipating a rally in Euro New Zealand dollar. So my top of my watch list this week will be the Euro New Zealand dollar and looking to trade it north. Now, I guess the question here is, what trading system, how will I trade that? I'm not going to give you specific levels right now and say, hey, buy at this level, sell at that level. But what I'm going to say is this. Based on what Chris and Tyson was talking about, using a different type of trading automation, trading strategies, I would say that right now, buy only on Euro New Zealand dollar. For buy only on Euro New Zealand dollar, look for the market to go ahead and change direction. If there's other confirmations that you need to confirm the trade that is changed trend, if it's a trend line break, if you're drawing a downward trend line and you want a trend line break first, a retest of that, and then deploy your system as an additional confirmation, that's fine. Whatever you use, I'm going to be looking for buy-only options on the Euro New Zealand dollar. Check this out. We've got a weekly. This is a monthly. We've got a monthly target up here at 79 and change, so 79.03, and so that means that we're looking for a price in this month still to rally up about 676 pips. So there's a lot of pip opportunity to the upside just on the monthly target. If I go to this just this weekly target, if you're just looking for a weekly setup right here, take a look at the weekly target. We've got price there at 75.44, and that gives us a weekly target of about 300 pips. Now we're not in an oversold condition yet. We're almost there. We're not quite there yet. We've got to get below 30. But once we do get below 30, it's going to start hyping a lot of traders to start thinking about buying long, because what happens is this pivot point becomes almost like a level that price gravitates towards on a week and a monthly basis. And so we're expecting about a 300 pip for this week rally in the Euro New Zealand dollar. And then for the month, we're looking at about a 774 pip opportunity. I see the divergence. I see the opportunity. Now it's a matter of how you're going to trade it, and that's going to be up to you.
Yep.
So yeah. Any comments?
Gary, I agree with all of your trades. Chris, I agree with all of you. And one of the things is traders are wondering is what's going to be the catalyst that's going to make these go. And I think a lot of the catalyst is going to be technicals. It's going to be profit taking. You think about the stock market. A lot of these are risk off trades that we're looking for. We're looking for money to come into the euro, the yens, the Swisses, the dollars, which is more of a risk off type of move. Why would that happen? It doesn't mean the economy is going to have to fall apart again. It means maybe people look and say, geez, this thing has gone crazy to the upside. Let's take some profits. And so I think this is going to be a very technically driven type of kind of retracement that we're going to see. And I think that all of the pairs we talked about today are going to prosper in that.
In fact, if you guys take a look at the dollar index, we did speak about the dollar index. You take a look at the dollar index, you'll see that the dollar index is set up almost like exactly how the Euro New Zealand dollar is set up. The movement of the Euro New Zealand dollar is actually very much mirrored by the dollar index movement. And so if I'm expecting, and this is how I've been trading for years, and always looking at the dollar, if I trade the Euro New Zealand dollar, I'm always looking to see what happens out in the US based on the dollar movement. And whatever the dollar index movement is going to be, I can almost mirror that's going to happen here in the Euro New Zealand dollar pair. So if we do get some bullish movement out of the news on Wednesday, that's ultimately going to push the dollar index bullish, which ultimately is going to move the Euro New Zealand dollar also bullish. Because remember, dollar index is also part of the basket of the dollar index is the euro. So we're going to get some strength out in that currency pair. Euro New Zealand dollar is going to start taking off and start heading north as well. So that's what I'm excited about the data coming out on Wednesday. So I'm going to say that this Euro New Zealand dollar, we may start getting some movement in the Euro New Zealand dollar towards Tuesday as it starts heading into Wednesday, because what they anticipate is going to happen on Wednesday. And then once we get the data out, I think then we're going to start seeing a turnaround, and the V point of the move is going to take place on Thursday and Friday.
One real quick thing that you just said that I think is so important, and this is going to be the quick plug for our trading rooms, is the fact that you just said the Euro New Zealand dollar oftentimes tracks the dollar index. And the reason why, and Gary knows this, Chris knows this, we all know this, is because there's correlations within the market, and traders that are the best in the world understand those correlations. So if I'm looking at the dollar index, I know there's other currency pairs that may not have a dollar cross that are going to move along with that because of correlations, or potentially even negative correlations. So knowing that kind of stuff, and that's the kind of like ancillary education and benefits that you guys will get, anybody out there watching, from our trading rooms, is understanding if this moves, what else is going to move. Very, very important stuff.
Yeah. And on that subject, Chris, what was the success you guys had in the trading room? I know you posted a lot of great input on the results. 4,500 plus for the week or something like that.
Yeah, so we had some positions that rolled in. We've been in some positions since March. We had a position trade on the Euro Swiss, the CAD Swiss, the New Zealand Swiss, the New Zealand dollar. We took a healthy chunk of profit out of those. But just in those, I mean, so we've had a nice blend of like hey, we're position trading. And then we've also had some blend was, hey, we're trading everything right now with smaller time frame alignments and going with the current direction. Just in the last couple of weeks, we've probably, I know that, so my trading room right now is at 21,000 pips for the year. And we're not even through the halfway point. Like last year, the entire year we did 30,000. Now we're halfway. We're getting to that halfway point. We're at 21,000. Like I'm super excited about where we're going for the rest of the year. And the fact that, we've changed our schedule around to put ourselves in front of the markets when it's the right time to do it, and what systems and strategies that we're trying to, change and adjust to, so we can put our system strategies and tactics into the right conditions to be profitable and be optimized. But it's been a great, realistically, considering where my mindset was in March and having to switch gears and feel like I'm reacting, and it's like, oh my gosh, is this like the worst thing to feel like you're chasing everything, to then just like setting in, understanding that, look, if there's good volatility, let's follow it, let's flow with it. And I mean, we have just seen an incredible amount of trending conditions, probably more so than we have seen. I mean, and again, it's interesting. We talk, if we had a replay of 2019, a session like this, or a mastermind that we've done, or any of our big events, we're talking about this low volatility in 2019. Like, get ready for volatility, and just like we've experienced the last 3 months, it's here. And I don't really think volatility is going to disappear. And I wanted to say one thing for this week. Look, the Fed has also been a catalyst on its own. The Fed could say something this week in a statement, and I think they're going to be very calculated. I think they're going to be very precise with what they say, but they can say things that the market doesn't like. And they did it back in 2018. All of a sudden, they were reactive and changing policy in 2019 to satisfy the market. So the Fed can do things and say things that the market doesn't want to hear. Like Tyson said, hey, we might start looking at raising interest rates. Hey, we might start looking at tightening. Hey, if they think that things are looking up, then they're going to start looking to adjust policy accordingly, because where we're at right now with 0% is unsustainable, which is why they started to raise rates back in 2018, thinking that was the right path forward. And instead, we're right back where we started. So there's been a lot of, again, we keep using extremes, but it's like, holy shnikes, that's what we see. We see extremes in price. We're seeing extremes in sentiment. So again, we need to follow along with those, but it's at these levels. Like, technically, I'm not a buyer in stocks. Technically, I'm not buying high in currencies. I'm not selling low in currencies. So probably as of last week, it's like, and it's funny because in my weekly outlook this week, I was talking about the June 1 and June 2 candles. We just had this crazy blow off in June. Like, everyone, I think, thought that end of May was like, oh, we'll see profit taking. Didn't happen. I thought it didn't happen. So those kind of resistance was blown off, support was blown off. And now it's like, okay, we've had a week to settle in. We've had a week to see these extremes. Now we're back here staring at the technicals. And again, maybe it is the Fed. This is really the only high impact news I'm kind of following this week. And the Fed, I doubt they're going to say something that really makes the market mad, but they can start planning for the future, and the market may not love that. So anyway, it's all going to come down to, what does Wednesday's candle look like? If the Fed does something the market doesn't like, look for the stock market to close negative. Look for it to be maybe up on the day and down for the close. I mean, they always say amateurs open, pros close in the stock market. So I want to see what that does on Wednesday. I certainly want to see what the currency pairs do from Wednesday's close to Thursday's trading. And then we can talk about this again next week. But I mean, directionally, I think all of us have specific plans, and we are kind of tooting the same horn. Like, we want to see some Aussie weakness, right? I mean, Gary, you're New Zealand. It's a commodity pair. So, I mean, we're expecting some commodity-based pairs like the Aussie New Zealand to get a little bit weaker. Also, oil is at a good level where it's like hitting that $40 resistance, where we can see some profit taking in oil, and oil starts to stabilize, going from literally 0 to 40. Like, we can stabilize and have new ranges from $20 to $40, and we start to see that seasonality and that supply and demand cycle in oil. So
the one thing that I'll say real fast, and it's actually, I heard this on CNBC again. It was one of the commentators that manages a pretty big fund, and what he said was so telling to me. We may not have bad fundamental announcements. The economy might be turning around, it might be coming back, yet we still could see some type of retracement, maybe even a decent sized retracement in the markets. How is that possible? Because he said, I've had one of the greatest runs in my 25-year trading career over the last 3 months. There's a lot of traders that have had phenomenal runs in their stock trading and their investments over the last 3 months because they reposition at those bottoms. And again, they're going to get to a point where they say, it's time to lock in some profits. My risk is now holding and thinking this thing's going to go to all-time highs. Let's lock in some profits and see if we can buy at a little bit of lower price. And I think that that's going to be a theme for a lot of professionals starting to take some profits, and that should cause a little bit of a sell-off, which also should cause a bid in the dollar, in the euro, in the yen, in the Swiss, which is causing sell-off in the New Zealand, the Aussie, like we're looking for.
Absolutely. And on that subject, we're going to go to stocks. So now that we're talking about stocks, I know, Tyson, you got a stock that you mentioned in the beginning that you're seriously thinking about getting involved in. What is that stock, and what is it in detail?
So this is a stock that's trading at an extreme discount to the market, has not had the bounce like the market has had, and I think has a theme to it. It's a small cap stock, very, in fact, technically now it would be considered a micro cap stock. It's Briggs and Stratton, which is an engine maker for lawnmowers and snowblowers and all that kind of stuff. Now, why is this a theme?
And generators.
In generators, I believe that there's going to be a mass exodus from big metropolitan areas. You can conclude why I believe that. I believe that home ownership in suburban areas are going to increase, and I believe lawnmowers are going to come into more demand. I believe snowblowers are going to come into more demand. And they are also trading at extreme low prices. They have plenty of cash to get through this. They have funding available. Right now, think about this. I want you guys to think about this. We'll talk more about this next week, but I can go out to January 2021, so in 6 months from now, or 7 months, and I can sell the $2.50 put for $1.35. Think about that. So that means, and it's trading at $2.65 right now. So if the stock is above $1.15 by January, I make money, and if it's above $2.50, I make almost 50% on that trade.
I'm looking at it right. I'm looking at it right now, Tyson.
It's nuts that I can get $1.35 for the $2.50 put for 7 months. That's crazy, guys. It's really crazy.
Yeah, that's an awesome find, and it's funny because we've been contemplating the Generac versus Briggs and Stratton because we've been wanting to get a full house generator here. We've had some freak power outages over the last couple of years that we've been here. So, man, that's and to see that type of price action on Briggs and Stratton versus others. In fact, Tyson, while we're doing this, I looked at Morgan Stanley today. Holy shnikes, man! Like $29 up to $50. We've had some amazing runs, and this one hasn't run yet. So
this is the one that's been on my radar. I went through all of them today that have been on my radar. I've got a list of about 25, 30 stocks that I follow on my radar. This has been one on my radar that has not had the reaction like it should, and rightfully so. It's went through some hard times, but they've secured credit lines. They've got a bunch in the works. Solid company. It's trading at the same level it was trading at in 1990. Think about that.
Okay, I'm going to challenge you on this one, Tyson. I want you to go ahead and put some information and put it into the MTI website on the Facebook, social media Facebook. Throw it in there, MTI traders. Go ahead and throw some information exactly what your thought is and how you're going to be able to trade. How you traded, right? We can't tell them how to trade, but how you're going to trade that. Go ahead and post that information on the MTI traders social media website. Absolutely. So they can go ahead and get that information. So, guys, if you want to get that information, check out the website. Tyson's going to go ahead and do it this week and post that information out there so you can go ahead and grab that information. And he will reference, of course, this session where we went ahead and spoke about that move. And then, Tyson, a couple of months from now, make a note. Talk about it in a couple of months so we can see the end result and what your decisions on that trade is.
Gary, if it works out, I'll talk about it. If it doesn't, I'll forget about it. No, I'm joking. Absolutely, we'll revisit it. No matter what. Because here's the deal. I don't lose money if I hold this to expiration. As long as the stock doesn't go down by 50% of what it's at right now, I make money on the way I'm going to trade it. So
perfect. All right, perfect. Well, there was a question that came up on one of the students that said there, wouldn't the market makers also know if we draw in these channels and we place in these channels, would the market makers know about where these channels are? Are they looking at the same information we're looking at? And the bottom line is it doesn't really matter whether they are, and I'll explain to you why. Because I know that there's this rumor around that market makers are looking at our trades and they're trading against us and all that good stuff. But just keep this in mind. when you're looking at it, when you're trading as a trend trader, when you position yourself as a trend trader, not a scalper, but a trend trader, your stop losses are pretty wide. Brokers, market makers, right? They have room to move price, to manipulate price based on about a 15 pip spread. So if price is trading, if the market price is trading at, let's say, $10, I'm just going to use that number, $10. They've got a 15 pip spread between that to keep that price in between. They cannot manipulate more than that. So even if they do know about these channels and you trade in these channels and you got your stop levels at these certain levels, they can't manipulate price too far away from where the market price is at, because they're going to be taken advantage of by other traders that actually watch and do arbitration against brokers that move their prices too far away from the market levels. So it doesn't matter whether or not the brokers understand and know where these channels are. They are offsetting our prices with the interbank, and so we are going to be fooled at those things. The only time where manipulation can take place is when there's huge fundamentals, like when there's Brexit, when there's a trade war that's taking place and the news comes out as a flash news. If there's a flash crash, that's the only real time that brokers have a lot of leverage into manipulating market price, and that's why we always say stay out of those type of market movements, because price is moving so rapidly. It's very difficult for you to even get fooled, and when you do get fooled, it's going to be at the broker's discretion, which means they're going to say that I can only fool you at that price because that's the only price I got, and that could be at any price you don't even know. So you're at a flip of a coin. But when it comes to just trading these type of patterns and these type of channels and all that good stuff, market makers, we don't really worry about whether the market makers know and understand where we're at and what levels we want to trade, because we've got our positions in the market that have got stop losses away from where volatility can go ahead and get us in and out of the market and stop us out. But if you scalp in, then scalping, yeah, your stop's a little bit tighter, and if it's within that 15 pip range that the brokers have, and you see at rollover, when the market rolls over at 5 p.m. Eastern Standard Time, you can see a lot of the volatility pairs that have got wider spreads. Obviously, you're going to be, you want to be out of the market if you're scalping at those times. But other than that, we should be pretty good. So I want to go and make sure we address that question right there. Any other questions that have come up here quickly we can grab? I know that there's a bunch of traders posting questions here. Tyson, I've made a nice deal. Okay, there we go. Yeah, I don't see any other questions. Hey, by the way, traders, just remember these sessions is, we constantly watching the chat. If you have questions you want to go ahead and post during the conversation we're having, as long as it's not far off topic, we'll obviously get to address those questions. But we definitely want to go ahead and have you guys send questions in while we're busy chatting about the markets and seeing what's happening. I'm going to give the guys a last final words. Chris, I'm going to start off with you. Final words for the guys.
Yeah, I think that, certainly a slow start to the week to kick things off, but that's good. And that's usually what the typical, price action is like, the day after non-farm payroll. A light calendar, but the Fed is front and center. CPI news for the U.S., watching the dollar index. I think the dollar index getting some decent movement. Stock market, of course. I mean, I've definitely been watching the stock market to influence my currency decision-making a lot more this year, the last probably 2 years, than I have ever before. But we're at that cycle. We're at that time of the year in Forex where April, May, going into June. Look, June is essentially either a drifting continuation or June is look for ranges. So when we've had these big extremes, I'm expecting some of these technicals to play out, some of those extremes to start shifting directions, look for some of these brief corrective moves, and then I'll start looking for these intermediate levels to buy and sell from for the next couple of months. And then the next big move for me is post-summer and into the U.S. election. I'm going to do my very best to be very choosy on what I trade. Aussie-wise, like I love the technicals on the entire Aussie basket. I'm probably going to be participating in most of it. Aussie, New Zealand, I have a certain plan on that one. I'm only wanting to buy it only, so I'm hoping that one cooperates. But for the other ones, I think that we can take some nice, this week, next week, see some decent short-term profits on the Aussie pairs. The yen is another one that I'm watching really closely from some of those June 1, June 2 breakouts. And I don't think it's going to take much to see, what we're looking at is how does it happen? I think profit taking is going to be a big part of why we're starting to see some corrections in the market. And I'm totally fine with that because we have seen some extremes. And, I am wondering, like, with these highs and these higher highs and these lower lows and these extremes and these higher volatility, is this the new normal? Probably not. I mean, but it's like, it's here to stay. So don't force fit, the market to do what you want it to do. It's like, always be adaptive, always be flexible, and make sure we're trading the right way, making good decisions with sound equity management. That's the best thing.
Yeah, perfect, excellent, man, fantastic. So, Tyson.
Yeah, it's very simple for me. I think any asset class that you can look at, I don't care if it's currencies or stocks or whatever. I think that the March lows are not real prices. I think that these highs are not real prices. It's somewhere in between, and I think that's where price is going to stay in between until we figure things out and where we're at in the economy. So trade within those ranges.
Yep, absolutely, and I must agree with both of you right there. We're definitely heading into some slower moving markets before the summer takes place. But I definitely believe that, just like Chris and Tyson, looking for some Aussie movement, correction is absolutely due. Check out the dollar index coming up on Wednesday. Look at the news report coming up on Wednesday. That's going to be my focus on Wednesday, is to take a look and see how the market moves based on the reports that come out on Wednesday out here in the U.S. And my currency pair of the week, absolutely going to be Euro New Zealand dollar. There's going to be some movement in that, and certainly the Aussie basket. Check out that correction is due on Aussie basket. We've had a lot of strength out in the Aussies over the last couple of weeks. We're definitely due for correction, no doubt about that. Guys, thank you very much for coming in. Appreciate you guys, and the information was absolutely stellar. And we're going to go ahead and continue these conversations next week. Make sure you join us next week again, Monday, same time. And we'll see you then. So from Tyson, Chris, and myself, everyone have a fantastic week of trading, and we'll see you then.